Thanks for joining me in Ron's basement. I am glad you are here. It's just me and you, and we got to talk about something not very comfortable. It's already been painful enough for us, right? Over the last year, every sector of the market has been corrected or decimated, however you want to talk about it. The S&P 500, the NASDAQ, bonds, gold and silver, and Bitcoin, everything has taken a severe beating. And I don't want to be Mr. Negative, but what I don't hear anybody talking about is also what we have left. It's also been eaten away by inflation. And when you factor that into the equation, it's not pretty. Look, we don't like to talk about negative subjects, but we have to accept the reality for what it is. And when we factor in inflation to the already horrific returns we've had, it is horrifying. Let's talk about it right now. What do you say we dive right in and go through the first example in a very detailed manner so you can understand how I calculated all these numbers? We're going to look at the QQQ, the ETF that tracks the NASDAQ 100 stocks. It is down 32% from its 52-week high. That means for every $100 you had in that stock, in that ETF at the 52-week high, you now only have $68. If you realize that that $68 you have now has been eaten away by, let's say, 15% inflation, the $68 you had left after the NASDAQ has dropped to where it is today only has 85% of its buying power left. So if you multiply the $68 times 0.85, you come up to $58. That is a loss of 42% from the $100 you started with roughly 1 year ago. Thank you. Yes, you, the one and only you, for joining me here in Ron's basement. If you like to dive a little deeper, maybe not quite as deep of a dive as we've seen in the S&P 500 and the NASDAQ, but if you like to dive deep, analyze, try to see the forest through the trees, you may have found yourself a new home, you are always welcome to join me here in the basement. If you enjoy my content, get some value, please subscribe, turn on the little ring-a-ling-ding-a-ling bell, that way you'll get notified every time I put out a new video. Don't forget to leave a comment in the comment section below. Now let's get back to the info. This is atrocious, folks, and this explains a lot about what's going on in the economy, and we're going to talk about that a little bit later in the video. Let me run through the other major investment classes and tell you what the inflation adjusted, the real return was. The S&P 500 down 33%. You know, the front page number is down about 20%, but again, when you factor in the inflation losses, you're down 33%. The small caps, the IWM ETF, down almost 40%. Bitcoin down 70% from its 52-week high, but when you factor in inflation, it's down almost a full 3/4 or 75%. The bond, the 7 to 10 year bond fund, IEF, that I looked at, it's down 20% as a headline number, but when you factor in inflation, it's down almost 32%. Gold, not much better. I was really expecting better numbers out of gold. It is down when factored for inflation by almost 32%. And silver, pretty atrocious, guys. Our old friend silver, I was shocked by this. Down 30% from its 52-week high, but when you factor in inflation, it's down almost 40%. So what do all these numbers tell us? That's what we need to talk about. Well, it tells us that the American investor, right, has lost trillions of dollars on just a numbers basis, or a nominal basis is the fancy way to say that. But when you factor in the real returns, when you factor in a 15% inflation level, which I think most people, right, we know we don't really believe the official numbers, so I used 15%. When you factor that in, people have much, much less money. Now, very importantly, that might explain the slowdown in economic activity that's going on, not only here, but this is going on all over the world, right? People have less buying power. Maybe on a numbers basis, they're spending the same dollar or euro amount of money, but they're getting much less for that money. So that means less activity, less trade, less jobs to get the work done, to produce the goods or provide the service. That is a very scary prospect for the world economy going forward. And aren't we starting to see evidence of this everywhere? Very well could explain why trans-Pacific shipping rates have dropped by 75%. That's the cost to ship products from China to California. 75% drop because there's not demand to ship things. Things could slow down very, very quickly in the economy. The crash, right? The decrease in demand that Jerome Powell and the Federal Reserve is after, they may just get it, but at a faster rate than they were bargaining for. And what would happen then? Well, either they're going to let the economy completely crash, destroy the U.S., destroy the world economy, or they'll come back in one way or another and be loose with monetary policy. They may not call it QE, right? There's kind of a stigma against that now. I heard a term called quantitative tinkering, that they may go from quantitative tightening to quantitative tinkering. They have all kinds of backdoor smoke and mirror mechanisms they can use to loosen the money supply in the world, and they very well may be faced with that prospect sooner than later. Let me know what you think. And let me know what you think would happen if the Fed and the world central banks do have to continue loosening once this economy crashes down. What do you think would happen to our friends silver and gold? They've been around a long time. They've seen all these puppet shows over and over again for thousands of years, and somehow they've been able to maintain their value. Everywhere in the world, gold and silver have maintained their value, and forever. My money bets that they'll continue that in the future. Hey, I don't have a crystal ball, just sharing with you some data that I saw. Horrific when you factor in the impact of inflation on the already horrible returns that we've seen in almost every market throughout the world. I think things maybe are even a little worse than we think they may be out in the economy. Certainly a bit more challenging than our friend Janet Yellen at the Treasury Department thinks, that the U.S. economy is so strong, and we know that Joe Biden's on top of all of this. Hey, thanks for joining me. You're always welcome in Ron's Basement. I'll look forward to seeing you next time. Hey everybody, it's Ron from Ron's Basement, live on the log flume with Lily. Lily, say hi.